Ladies and gentlemen, welcome back to the channel. Today I'm going to start a new series called Option Selling Strategies 101. In this very first video, I'm going to talk about why I sell options and why options can be so profitable, why they're so flexible, and really, I think they're one of the best semi-passive income strategies that you can use. Now, I say semi-passive is because 3 to 5 days out of the week, I'm doing something with my options portfolio, but I probably only spend no more than 15 minutes on those days with my options portfolio. However, once you have your portfolio structured, it's essentially bringing in profit almost every single day in just about any market condition. I think selling options is something that is underutilized for most investors. Most investors should know how to do this, and at least on a small scale, probably should be doing it depending on what their investment goals are. Now, this is not investment advice. I'm very biased when it comes to cryptocurrency. I'm very biased when it comes to selling options. It's something that I love to do. So, consult a financial advisor. This isn't financial advice. However, we are talking about selling options. I do love it, so I'm going to be talking about it in this video. So first and foremost, the reason that I love selling options so much, I've got the page up right here. I'm not signed in, but this is the Derive platform. You can use any platform. But when it comes to selling options, the reason that I love it so much is because you can make money in almost any market condition. And I'll show you that here in a moment. But essentially, the market hasn't moved a whole lot today. If you buy Ethereum or you buy Bitcoin, you've got to wait for it to go up in price. You're sitting on your hands waiting and waiting and waiting for it to go up. And it goes up 5%, it goes down 4%, it goes up 6%, it goes down 4%. Maybe it goes down 8% and goes back up 6%, whatever. You're just sitting on it waiting for the price to move. And then when the price moves, at some point you're going to sell and take some profit. Two things I don't like about that. One is I don't like having to wait for price to move. And with options, the price can stay stagnant and you still make money with options. It's almost like just as time passes, your portfolio's going up in value every single day, or at least it's trending up in value, even if the stock price doesn't move. And then if the stock price does move, even if it moves up, even if it moves down, you can still make money in most market conditions and in most circumstances. And even if for some reason, the stock price moves a lot in one direction, you still have options to be able to manage or mitigate your losses. It's not all that difficult. So we're going to talk about why I sell options. Reason number one is because you can make money in almost any market condition. So let me just show you this for a second, and then I'll explain why we can make money like this. So first thing, let's come over here. And again, we're trading options on crypto. I trade options on ETH, and I use the Derive platform, which is what you're looking at right now. Now, Derive doesn't sponsor my content. They never have. I'll put a link in the description if you want to check them out. It is an affiliate link. However, just know this, that you can use these same strategies, these same fundamental strategies, well, if you're trading stocks or if you're using any other traditional broker on the stock market. However, for options, let's just take a look. So we're going to sell what's known as a put option. I'm just, for example's sake, for September 6th. So September 6th, we're going to sell put option. I mean, we're going to sell it below the market. The market's currently at $2,525, and we're going to hypothetically sell an option for, let's just say, 22%. Okay, 22%. A week out, we're going to be able to sell that option. We'll make $5.40 when we sell that option. You sell 10 of those, you made $54. The price would have to go down below $2,200 by September 6th before we lose money on this. We have a 94% chance that this is going to work out in our favor. Why would I not take this trade? Essentially, we are selling options to other people who are gambling. So in a way, it's like we're the house. Now, why do I say other people are gambling? Because somebody's buying this option, hoping that the price drops, and it has to drop before September 6th, essentially before they can start making money. I mean, I'm oversimplifying that a little bit, but they need the price to drop. So they're going to spend a little bit of money. They're going to pay, $6.90 per one option, and they're going to hope that the price drops. And if the price drops, they're going to make some money. And potentially they can make a lot of money, but they first have to buy, meaning they have to spend money. We sell. So the moment that we sell, say we sell 10 of these, $54. That $54 goes to our collateral balance immediately. Immediately. And what does it cost us to sell that? Well, it doesn't really cost anything. We just sold it. What was that, 22? It doesn't really cost us anything. We just sold it. Now, they will, because what we do on Derive is sell what's known as cash secured puts and cash secured calls. And essentially what that means is they take our collateral and they hold it. So if we have $1,000 here and we sell one contract over there, and we sell that one contract for $5.40 right here, essentially it's going to take us about $340. I'm over, that's probably a little bit more than it would take. Maybe it would take 330, but about $340 is what it should take. Let's see if I can click that. It's not going to show it. I would have to be signed in. So about $330 per contract. So if you wanted to sell 10 of these, you would need to have in your account $3,300 or $3,400. Now here's the key. You're not losing that money. All they're doing is they're holding that money there in the event that the price, 94% the price drops. And that margin is just there just to secure this position in the event that it, went super south. But it would, again, we have like a 94% chance of this thing working out. And if in a rare worst case scenario, then we could lose the money that secured the put. However, you're almost never going to lose the full amount. And most of the time we don't lose it. We almost never lose it because we can do what's called adjust the position or roll the option to a later date. And if you've been following my journey where I'm selling options, you've actually seen me do that. But here's the thing. We're going to make money because this option price, here's the number one reason we're able to do this. This option price is what's priced in is the value of time. So the more time that is running out, the closer we get to September 6th, even if the price stays the same, this price will go down. So for example, if we were to choose the exact same strike price of $2,200 on September 30th, you'll notice that the price would be more expensive. We'd make more money. Watch this. September 30th, 2200. This one is $17.70, not $5.40. Same thing. Go out another week, 2200, and now we're at $33. $33. Why is it going up? Because there's more time. So what the way you said is there's essentially more time value in that price, or there's more theta in that price. There's something known as theta decay or time decay. This means that the price just will automatically go down as time is running out. This is why it's hard to make money when you buy options. Because when you buy options, if you buy puts anyway, and the market goes up, you're going to lose money immediately. If the market stays the same and as every day passes, you're going to start losing money. And the thing is, the closer you get to the expiration date, meaning the option expires worthless for the buyer, but we already lock in our profit because that money's added to our collateral immediately. What happens when options expire for us is we get our margin back in our account, so we can essentially use that margin to secure more options when we sell them. So it's theta decay. That's the number one key that you got to remember. It's time value leaving the amount of theta, or the amount of time left that contributes to the price of the option, goes down. That value goes down as we get closer and closer to expiration. Here's a chart on theta decay. Let's just say they're using like the stock market. You had 9 months left. It had 100% of the theta in the price. As you get closer and closer to the expiration day, the theta decay happens faster, which means the price drops quicker and quicker and quicker. That's why you'll notice that I tend to like to sell 1, 2, and 3 weeks out, because theta decay happens a lot faster during that time period. Now the price can be a little bit more volatile, or the price of the option can be a little bit more volatile as well. So it's a little bit more risky if you try to sell on a shorter time frame, but you have theta decay working in your favor, and that's a good thing. So the reason that I like selling options is because I'm able to sell options and benefit from practically any market condition. The reason I can benefit from almost any market condition is because of theta decay. Time passes, we make money. So we're literally extracting value out of the market almost every single day by selling options, whether you're selling put options or you're selling call options. So how would you get started selling options? Well, if you want to get started with Derive, you can go to the link in the description and make sure you have MetaMask installed. Make sure you have some USDC in there, and then just come over here, click the link in the description, and be able to click sign in. And that will help you go ahead and get started. Then you would come over here, come to options, choose whichever option you wanted, put options or call options, and then you would just choose to sell those options. You sell put options below the market price, you sell call options above. And just make sure, always make sure the delta is like below 50, like 45, 33. That's how you know you're on the right side. And by the way, I always try to sell around a 7 or 8 delta right now. That's just me. It depends on your risk tolerance. By the way, I want to say this real quick. If you think to yourself, you're like, well, that's gonna, if I go out to the 13th, for example, and I sell this $3,000 strike price for the 13th, then it says I'm only going to make $6.40, but you said I have to use, roughly $340 as margin. That's correct. So what that means is you're essentially putting $340 to work, and you're earning 6.4, basically $6.40, almost 2% inside of about 2 weeks. Where else can you make 2% on your money? And in this case, you're going to have about a 93% chance of success. Where can you do that? I don't know of anywhere. I hope you're seeing the full picture here. This is why I love selling options. I'll put a link in the description if you want to check out Derive. If you don't want to trade crypto options, you can trade the S&P. You can trade a lot of other option underlyings as well with a lot of other platforms. But if you have any questions, please put them down below. Hopefully this explanation has been clear for you. Do me a favor, smash that like button, hit the subscribe button, click that bell notification icon, and click all. Also, if you want to know how you want to see sort of a blueprint on how you could earn $1 million or more with options and with cryptocurrency, take a look at the video on the end screen now.